Hello, Professor Collum. Professor Collum, my name is Don Marshall, and I have been following you on Twitter for a few years now, and I've enjoyed that follow. And I just came across your tweet here asking about dividend-paying stocks, and in particular Rio Tinto. So I wanted to take this as an opportunity to kind of introduce myself a little bit and also give you some insight based on the tools that we use on Rio Tinto. And I'm happy to plug in any other stocks you might be looking at for that matter. And I don't have to make a video on it, but I can always just snap a picture of it. But just to introduce as to who I am and who I am not. I am not a broker or a financial advisor. We don't make any specific recommendations to buy or sell anything. I actually spent 25 years of my life teaching surgeons how to do surgery. My wife spent her career with the likes of IBM, Lotus Software for years. And back now, about 15 to 20 years ago, we set out to develop some tools whereby we could make, hopefully, informed, objective, and consistent decisions about where to put our assets, whether that be in currencies, stocks, ETFs, options, or futures. We started with the premise that there were basically only four ways to invest or trade. One, trend follow long. Two, trend follow short. Counter trend short, or counter trend long. Now there are a lot of axioms that come out of Wall Street, but one is that trend following is the easiest and probably the most rewarding way to invest or trade, and that is true. Of course, it hinges upon one's time duration, but we developed our tools around that premise, and we developed something called the swing machine. And I want to take an opportunity to plug Rio Tinto into the swing machine, and let me show you what that looks like. So what I'm about to do is plug, actually Rio Tinto is in this list, and we can plug in any other stock that you'd want. But let me just introduce you to what you're looking at. This is a product that my wife and I built back some years ago, now 15 to 20 years ago. And we call it the swing machine for stocks and ETFs. We also use it for trading futures and options. The reason why we specify stocks and ETFs is the purse calculation is what is different. Everything else is exactly the same, and one can allocate the amount of money into this model, and it's a model that would impact the trade purse. And we have loaded in a $10,000 investment so that is what the trade purse is calculated on. But more importantly, what this is doing, it is not a moving average or anything traditional. Not that any of those things don't work or they're bad. I don't have a comment one way or the other. But what we did back now 15 some odd 20 years ago, my wife developed a math formula to look at the distribution of price in a very unique way and to try to identify trend, and that's what it's trying to do. We put the symbol in here. We can choose the interval, which for the most part would be daily, but we can load in weekly, monthly at the click of a button. This, of course, is just last price, net change, percent change. The zinger is really the signal that we receive from the model, and this will tell us when to enter, when to exit, and it will record it being long or dipping in price but is still long, or short or ripping against the price. Again, there are only four ways to trade: either long, short, or it's dipping or ripping. So it's built around that premise. The long yardage at quick glance will tell you, if we were to pick this one stock, let's just say Agilent. Swing Machine has been long Agilent for 182 days. The trade purse, if one had invested $10,000 into Agilent 182 days ago, they would be up $6,581.84. The entry price at Swing Machine was $76.37. The time was 4 p.m. We call it tea time. We're very serious at what we do, but the theme, of course, is golf. Keeps it light. The entry date was May 5th on the 20th. This gives us the trend information that even as a dividend stock, you want to know and appreciate. I'm sorry, we're moving over here. The trend. We have what we call the combined trend. This takes into view a near-term trend and a distant trend. And we'll just widen this out here a little bit, which on the next column, we show the near-term trend, the distant trend, and then we have what we call the altimeter, and this will be showing selling. This is most sensitive of all, and it will show where price is being accumulated or distributed first, and then the trend is impacted over here, which we act accordingly. Now we do slide over and show more of pivot information, all at a glance, all real time. We'll give you a glimpse right there. We just call that the fairway radar. So we're going to slide over, and let me first scroll to the top. The best performing stock for us out of the S&P 500 has been FCX as an example. 187 days ago, Swing Machine triggered a long at $8.92 at 4 p.m. on April 28th. A $10,000 investment would be $24,181 today. The trend is moderate, and there's pressure, a little bit of pressure down, a little bit, nothing too serious. And then the second stock, of course, Limited Brands. When we scroll all the way down, we'll give you a glimpse of this, and then we'll zero in on Rio Tinto. Out of 500 stocks, don't mean to make anybody dizzy, but we're going to scroll all the way down. Out of 500 stocks, Swing Machine is profitable in 400, currently about 437, 438. She is signaling opportunity in the next several, and so out of some 450 of the S&P 500, she is either profitable or flat, and she's signaling some possibilities here. We don't have enough time to explain just how that would be acted upon, but and then she does not get them all right. We do have some drawdowns, but what Swing Machine will do quicker, better than we can do is to dispassionately get rid of losing stocks. and that's what we try to do. So let's sort here and look at Rio Tinto. So here we look at Rio. It's RIO, Rio Tinto. This is the ADSs trading on the New York Stock Exchange. It last traded at 81.40. Swing Machine has it long for 50 days. The entry price was $62.71 on November 10th. Had one invested just $10,000 in Rio Tinto, you'd be up almost 29%, 2,980.39 to be exact. The trend, the combined trend, near and distant, is moderate. It's up. Near term, a little bit of pressure down. The distant is up. We slide over. It's experiencing just a little bit of selling, and that's my computer screen shaking like that. That's not my mouse. And we can actually see at a glance what we call the support and resistance levels, or the center cut of the fairway, and it is on a little bit of support here at 81.45, 80.51. So for us, this would be something we'd be looking potentially. We like to add on support levels. From the eyes of Swing Machine, this is in an uptrend. Not something one would want to short, and something, if one has it, I'd want to be holding onto it. Now, we have many other tools, and I'll showcase one other one. Now, this particular tool tool also is proprietary to us in that we wrote the code utilizing TradeStation's coding, their easy language, and operating on their tool called Radar Screen. This gives us a real-time view and a wonderful place to be able to come in and when to maybe take a little bit of profit, or maybe take or maybe add to a position. So I don't have enough time right here to explain it all, but we'll come in and we'll take a look at the where RIO is on this tool. And let me show you. We're scrolling down. So here's RIO right here. And as we come across, RIO is right in the middle, and that's fine. She's not extended. You know, we would prefer not. We would prefer to be buying over here, and maybe taking a little profit over here, or maybe selling some calls, selling some premium against the positions to, you know, it's almost like getting a dividend. Many times, like getting dividends on steroids. So we're happy to plug in any of the stocks that come your way and showcase what we're doing. I can just come here at a glance, and these particular stocks have been extremely beaten down. Now, we're not recommending anyone buy these or anything of the sort, but we're getting some indication that some of these stocks may be bottoming, maybe a double bottom. One would want to go in and do a little more homework, but at a quick glance, this is where we like to be picking up stocks. And on the other side of the coin, these we would be taking some profit in and/or selling calls to the speculators. So I hope you've enjoyed this. And our approach is very surgical-like. One thing I learned from surgeons is that they don't wing it. They don't vary their technique from one day to the next. They have a surgeon's approach, and that's the way that my wife and I approach the decisions that we make for ourselves. And I'm happy to also say that when I would recommend everybody register at the CME, they have some great educational resources. But we have entered into their contests. The CME has a CME challenge. In one contest out of some 1,400 traders nationally, we placed 20. And on the last one, out of some 1,600 traders, we placed number 8. And so we feel pretty good with the tools that we have, and we're happy, Dave, to plug in any of your dividend-paying stocks. I don't have them earmarked as such. We could certainly pull them up, but if there's some in particular, and maybe I'll try to do that, get a static list of some dividend-paying stocks, and then you could always certainly plug them in. We wish you the best, Dave. Thanks for all the perspectives that you share with us. We enjoy it. Thanks.